All right, welcome back. Now we'll be having our weekly market update with Catherine Murray, host of the Buck Stops Here. All yours, Catherine.
Thanks, Nima. Hello, everyone, and welcome to your weekly market recap. I am Catherine Murray. We are seeing North American equity markets mixed today, starting with the U.S. markets, the Nasdaq, Dow, and S&P, all mixed territory, but on track for weekly declines. We are seeing gold trade a little bit lower, U.S. dollar a little bit higher, Bitcoin futures down slightly, but WTI, the price of oil, is up by about 1.1%, and in fact is on track for 7 weeks of straight gains. In terms of what investors are watching, certainly the PPI and inflation reading did come in hotter than expected today. But earlier in the week, we had in line to slightly weaker CPI, so another inflation reading, leading investors to believe that the U.S. Federal Reserve might hold or pause in terms of their rate hike stance. So that's helped the markets a little bit. But again, a lot of unknowns, particularly because of the strength in energy prices, and that is leading some investors to believe that maybe the U.S. Federal Reserve will in fact continue to raise rates. Another perhaps bearish talking point in the markets, Moody's did cut the credit ratings on 10 U.S. small and mid-sized banks. We also heard from UPS on their earnings call this week that provided weaker than expected guidance. That also weighs on the outlook in terms of consumer demand and economic development, economic growth, that is. Speaking of which, a lot of concerns right now as it relates to China. Their economic data definitely has been slowing, and as we know, it's the second largest economy in the world, and a lot of focus has been on the recovery in China, which has not happened. Away from that, in terms of just some of the themes that we're watching the market play out right now, the market has been propelled higher on a year-to-date basis, driven by a lot of the tech companies that have been focused in on AI, whether it's the chip companies or the big players within AI. Think about Microsoft and ChatGPT. But that's actually maybe stalled out just a little bit. And now the focus is on some of those pharmaceutical companies that are out with new obesity drugs. So a little bit of a shift in terms of where investors are putting their money to work. Away from that, speaking of where people are putting their money to work, there are new fresh highs in money flows into money market funds. So again, as we know, this higher rate environment, you can earn what's supposedly called a risk-free rate that's higher than we've seen in well over a decade. So you are continuing to see people move their money into money market funds and or GICs. Certainly, earnings are very much in focus. Next week, we'll kick off the retail earnings. So think Home Depot, Target, and Walmart. We'll hear from all of those companies. And also next week, what's in focus is watch Sunday night. That is when we will get China's economic data released. Really important as it relates to the global growth story. And again, that has really stalled out. So we'll see if it's more of the same or maybe a bit of a pickup in good news. We'll see. And then also we will get the FOMC minutes from the Fed's latest meeting. So that'll give a little bit of color in terms of what they're thinking as it relates to pausing the rate hikes and or continuing to hike. Away from that, the TSX right now today is up higher slightly, following a higher close yesterday. Importantly, RBC has a report out taking a look at the consumer and noting that they are, in fact, slowing down their spending. That, of course, impacts the Canadian economy. We did have earnings, or in the midst of a big earnings season here in Canada. Just a couple to note. Canadian Tire did disappoint, sending that stock down. And also Sleep Country disappointed, sending that stock down as well. Air Canada, stock, the results were okay, but the stock reaction is really quite muted. Maybe a little bit of profit taking on the back of their most recent results. I'd also point out as well that RBC is decreasing the earnings estimates on a number of Canadian banks, just citing softer capital markets as well as softer M&A. So watch for that as it relates to your bank earnings results if you own any banks. And lastly, just to point out that the BC Port did ratify a deal, so ending that work stoppage. But of course, it cost billions and billions of dollars to the Canadian economy. Nima, I'll leave it there. Back to you.
All right, thanks for that, Catherine. Again, that was Catherine Murray, host of the Buck Stops Here. For more coverage on the markets and the world of finance, tune in to the Buck Stops Here on Sundays at 9 a.m. Eastern only on the News Forum Network.